Hello and welcome to New Wave, the podcast where we ask one big question: what's making waves in European climate tech this week? Joining me today are Hampus Jakobsson, general partner at Pale Blue Dot, and Matthew Blain, principal at Voyager Ventures. And today we will ask, can Europe deliver on the promise of fusion energy, or is it still 20 years away? We will also talk about why the creative capital stack is becoming the new normal in climate tech. And we'll quickly touch on the energy needs behind that $300 billion Orcale OpenAI deal. All right, let's dive in. This episode is brought to you by Decarbon, a Belgian startup turning industrial CO2 emissions into valuable feedstock using a plasma technology. If you want to learn more, reach out directly to David or Gilles. I'll put all of the information in the description of this episode. Let's go back to the episode. All right, guys. So like most people in climate tech, we all spent some time at the job last week in Malmö. Hampus, thanks again for putting such a great event together. And I guess one of the hot topics was fusion. So I looked into the data, and in the last 12 months alone, we've seen over 3 billion of private capital flow into fusion startups. Some massive rounds like Pacific Fusion and Commonwealth, which both raised close to 900 million on a single round. But I think one deal really caught my eye, which is Proxima Fusion here in Europe, one of the biggest players on this side of the Atlantic. So Matthew, let's start with you. I know you love a good deep tech moonshot investment. With all that capital going into fusion, is it finally around the corner, or is it still 20 years away?
I think that's an excellent question. I think I've been engaged in the climate space for a long time, since about 2010 as a climatology student. And it's always been that technology. It's been just around the corner. It's always been 10 years away, 10 years away, 10 years away. I think there's definitely been a step change in the last 18 months in terms of maturity of some of these technologies. We're finally getting to the stage where we're talking about deployments. Just before we came online on this session, we were talking about the announced deployments in Virginia for Commonwealth Fusion Systems and the other deployment for the accelerator technology in Tennessee. That kind of concrete project. We've never been at that stage before. So it certainly does seem around the corner. The timeline for that is still a little bit unclear. I think some of the timelines for those projects talk about the early 2030s. Nuclear has an appalling track record of being delivered on time and on budget. And I also think it's important that we're clear-eyed in terms of the proven efficacy of these technologies. There's still a lot of uncertainty about this technology. As far as I understand, no fusion reactor has produced more power than is consumed in the reaction. And that is obviously a pretty critical uncertainty if we're talking about energy generation, for example. So from a timeline perspective, from an efficacy perspective, and from a cost perspective, there are a lot of uncertainties that we've certainly seen closer than we've ever been before. The final point I'll raise is also that the technologies that fusion is competing against, the goalposts are consistently moving further and further away. So particularly on the energy storage side, which is obviously what unlocks renewables from being intermittent to being clean baseload power. We've gone from 2 gigawatt hours deployed of battery storage globally in 2020 to 200 in 2024 in 4 years. And that exponential curve is growing dramatically. So where are we going to be in the early 2030s? So I think those are some of the questions I think about, but certainly closer than we've ever been before. And I think if you're passionate about climate and you're going, do we need fusion? Do we need renewables? Do we need gas with carbon capture? The answer is typically yes, because if we're electrifying the global economy, we need all the power we can get. So that's kind of how I think about it. And I think it's a very exciting time to be looking at the space.
For sure. And I guess, Hampus, you've been involved for a long time. So what's your take?
I totally agree to what Matt's saying. Also, I think that we're kind of Q above one in scientific terms, like more energy coming out than in science-wise. And I think that was shown nicely by NIF showed it late 2022 even. But the headache is that it's like all the confinement fusions, like the tokamaks, like the ether and all of those. I think they haven't come above 1 yet. And I think that one of the ways I look at it, it's very much, I think about that every time we talk to a deep tech company. I think that for a deep tech company, there are really 3 steps. There's like the science to engineering conversion and then the engineering to commercial conversion. And I think that fusion, I think, is just passing that science to engineering. Like it works scientifically. That's amazing. Like we can with a laser pulse and it could work for a couple of seconds maybe. And I think the headache is that can we now move it into something which reliably produces energy at a place? And I think that if we just look at history of fission, and I mean, sometimes I know that optimistic people hate when you take another tech and you say that's going to be similar, right? But if we just take how long took fission to go from actually working to producing energy, it feels like if we're optimistic, if we're very optimistic, we could do 10 gigawatts by 2040, which is like less than 0.5% of all energy demand. I think the reason I'm interested in fusion and I really think it's relevant, it's not only because it's cool. I think it's also because there are a lot of scenarios in which we maybe can't produce energy elsewhere. And I think that on planet Earth, as Matt is saying, solar and wind and batteries are price and reliability beating everything else already now. I think there could be scenarios of space and others where it is really tricky to solve solar. So I think it's really relevant. I just think that sometimes I find like both fusion and AI get a lot of like new shiny toy interest, because it's so much more interesting to start talk about something which could change the whole game than talk about the things that are actually really impressive. Like as Matt's saying, like solar and wind. I mean, batteries, it's insane if you look at the price drops of those the last, like if you look since 1970s to today, whereas the same timeline as fusion, of course. Fusion has been around since the 1970s conversation. It's incredible, but it's not as like Superman story, because it's a story of engineering, and lately the last 10 years it's been a story of China. And I think that makes it a less European story and less American story. It's a much more of an engineering and production story now. But I think the things I'm impressed about are EVs, heat pumps, and like those things. It's insane to look at the efficiencies we've achieved there the last 10 years.
It's really important that we have multiple irons in the fire. And I think Hampus alluded to the fact that solar in particular is by far the cheapest source of power for humans globally. The intermittency issue is well publicized. And while solar plus storage, for example, is cheap, I think if you are running a data center, it is no secret that it is not as cheap as a combined cycle gas turbine plant. And batteries have come down in cost dramatically. Solar's come down in cost dramatically. And I would expect both to continue a bit. But we also have to be careful in our expectations about how much further those costs can go down. I think they will go down. But we kind of have to, from a pure materials cost perspective, there is a flaw to both of those technologies. And it's always going to be a bit of a battle against combined cycle gas turbine. They're incredibly efficient method of producing power. So I think it's critical, if you're passionate about climate, if you're passionate about decarbonization, that we continue to explore all the technologies that have the potential to give us clean baseload power, whether that's solar plus storage and shaving off another few dollars per megawatt hour, or whether that's fusion, or whether that's small modular reactors, or whether that's biomass for carbon capture or gas for carbon capture, whatever it might be. We need to pursue all of these, and fusion in particular on a multi-decadal time frame has a lot of potential. We might have solved the problem by the time it gets to scale, but equally we might not have, and then we'll need it more than ever.
Also interesting, I think, about that is that, I mean, solar and wind, the intermittent ones, are cheaper because the baseload subsidizes it, right? Like if solar or wind was the only one, it would actually have to cover the whole usage. It would be very expensive. So the fact that we have a baseload is actually what makes solar and wind so cheap. So it's easy to say solar and wind are cheap, but because it's subsidized. And I think that's one of the things I'm really worried about when you're looking at governments, when they're looking at constructing new nuclear. They're always saying, look, this is the price per kilowatt hour. It's much more expensive than solar and wind. But then you have to realize that, well, the reason it's more expensive is that like the other ones are cheaper because it's subsidized by the base load. So it's really strange. I wish that more countries actually saw it as that they have to subsidize nuclear construction and guarantee a price so that commercial entities could build nuclear. Because now, if you're building a nuclear power plant and you see the fission or fusion, and then you see the cost curve of PV going down, right? Like it is a bit scary to say, well, if it hits under this price, like we were sitting here with a massive thing producing electricity that we have to sell for under our production price. So I think it would be way smarter if people actually did power purchase agreements for an extremely long time, as the ones announcements coming now from the fusion companies, but actually do those from a governmental standpoint and maybe like a 50-year time span, because that would allow more fusion projects to be commercially viable.
Where do you see fusion PPAs penciling out at commercial scale, Hampus? Are we thinking like one? I think in the last 18 months, there's been this huge renaissance in passion, interest about nuclear. Occasionally, I have to pour a little bit of cold water on it in terms of the UK particularly, my home country, we're going to be paying £250 per megawatt hour for power out of Hinkley and Sizewell for like the next 40 years or something insane, which is the world's most expensive power from the world's most expensive nuclear plants ever built. But I am curious. I think it's easy to think, well, fission's really hard. We've been doing that for decades. Fusion must be harder there. It's more expensive. But actually, my understanding is that's not the case. So I'm just curious. You're closer.
No, I don't know. It's a good question. I think that for me, like as you said it, I think the magical thing with fusion is the fact that the inputs are free, right? Like that's or like not free, of course, but it's like one of the weird things with batteries or with fusion is, of course, that the supply chain is really complicated. Whereas, like, of course, solar, the supply chain isn't that bad, but the second you want to store it in batteries, it becomes more expensive. And of course, uranium and uranium enrichment isn't something which is super sweet. So I think the fascinating I think about fusion, and I totally get why people are fascinated about it, is suddenly trying to predict something which is 30 years into the future, right? Like, I mean, even if we have production earlier, if you're starting to talk about actually running city-size gigawatts things, then it isn't like around the corner. But I wish we would. I'd hope that the fusion wave will pull some of the small modular nuclear reactors along with it, because it's going to change permitting. I think one of the things I'm really confused about now is just seeing how just like grid constraints, permitting bottlenecks, all of these things really delay electrification. And it's really complex. And I think that I see more and more people who are looking at building data centers and stuff off grid, just because it's so complicated to get them on grid. And I think that's going to be a massive thing. I think we're start seeing more and more of off grid X. But it's also kind of a failure in a sense, right? Because the grid is like a magical thing that we as a human species are able to build this enormous machine of collaboration. The fact that we're now making it hard to connect things to that is like, it's a bit sad.
Is it?
Or no, go Matt. Like the super interesting. Like maybe I'm completely wrong philosophically about that.
Well, that last piece, I think, if a data center can be operated off grid by building a microgrid around it, and it runs as we need it to, and it avoids adding a shed load of load to the grid, we can get the value out of it. We can deploy it quicker. I think that's a positive iteration. I don't think everything has to be connected to the grid from a philosophical perspective. I think that's how we connect people's homes, and that's how we connect people's businesses. But if there are standalone things, whether that's island communities or data centers, microgrids have been around for a little while. I don't see anything philosophically sad about that.
No, but I think the thing that you're right. I mean, maybe I was wrong. Just like I said it in the moment when I said it, I was just thinking about it. It feels like global trade, but you're right. Like I think that if you have a certain energy demand in a place, then why not try to build the supply for that locally? Why would you ever connect it, right? Like it's just like, even if you want to trade, the cost of connecting it and messing with the grid load. So like you're right. I think that's going to be a topic we're going to see more and more. I hope we're going to also see it less in island nations and more just like, yeah, we build a data center here, we make it solar and battery powered. Why connect it? Why bother other people, right?
Yeah, that also unlocks the fact that cities are more and more concerned with the power that goes into data center, and they are now saying, okay, you can't actually install more computing power because it just consumes too much. But let's go back on track on fusion, guys. So one of the things I'd be curious to hear your thoughts about is, as I was saying earlier, Proxima Fusion raised one of the largest rounds. So total funding for Proxima right now stands at 200 million. It seems super small compared to the 3 billion of CFS. Does Europe even have a chance to make it into fusion with less capital available?
I have always had such a headache when it comes to these kind of things, because I think that so many of these things, when they turn to this level, are infrastructural, and then I think the question is where the costs actually go. Like the rounds that are going to Commonwealth Fusion Systems or the Proxima Fusions are not going into massive labs, right? They're going to actual construction. So like, they're going into a lot of hardware and cement and magnets, and depending on which company and which technique, like it might go into lasers for someone else. But I think at the end of the day, I think it's so hard to say, because the second I think it starts proving itself, I think this is governments like are very, very happy to open up if it actually works. And I think that's one of the biggest misconceptions I find. This summer, I've been completely China obsessed, as so many other VCs, and listened to all the podcasts and all the books and all the interviews and everybody. And like, when a lot of those interviews, people are really saying how China is propped up by subsidies and governments and everything. I mean, every single country and every single tech is propped up by governments doing it. And then people say, yeah, in the US, it mainly happens through military. No, not at all. Like, Tesla exists because the automakers in the US were failing, and the US needed to bail them out, and then Tesla got in on it. So I think it's just these projects, when they get to a certain scale, it will just be government saying, will they do it with tax subsidies? Will they do it with grants? Will they do it with some other way? I'm not sure. So I don't think it's a problem if it starts working, to get states or other actors to pay for the construction of it.
Yeah, and I think I would take it in a slightly different direction, which is that capital raised is important, but it is not decisive by any means. If you take the hydrogen space, which is the green hydrogen space, which is not a space that I've invested in, but a space I've looked at a lot, and take two companies, electric hydrogen in the US has raised an absolute fortune, I think approaching perhaps even over $1 billion. 18 months ago, I met a European company called Orcale, who is producing today hydrogen at a much lower levelized cost than electric hydrogen has. And they've only raised, $15 million just through some period technology. So, and they're already selling commercially, whilst I believe electric hydrogen is yet to sell commercially. So I think companies can use fundraising as a strategy to try and stamp out competition and assert dominance over a space. But particularly in these kind of engineering intense, multi-decadal timelines, there is no substitute for engineering execution and the performance of the actual product. So I think it's really exciting that those companies in the US have raised the capital. Had I backed Proxima Fusion or any of the European competitors, my advice to the companies would be the same, which is focus on the uncertainties that we're focused on, use the capital that we have, raise capital if we need it, but let's just focus on execution and not get distracted by what other people are doing in different lanes.
And also, I think that I did this, as we talked about off camera before here, I did this nuclear conference 2018, 2019. And it was interesting because a lot of these people collaborate. Like, it was very, very clear that all the JET people and the ITER and the before Proxima people and like every single technology was in the room. And it was interesting because I think that they were really sharing knowledges and thoughts. I think the only ones where the conversations got very heated were when you have like Protestant and Catholics in the same room. So like when it got into, is it slightly better to do this or this shape? Then the conversation got really heated. I think everybody was very much agreeing on sourcing batteries or like, permitting everything. The second you got into the actual nitty-gritty parts where they were close but not quite close to each other, that's when the aggression was very clear in the room. So we kind of forbade people to say the word tokamak or other words because it was very quickly hard. But I think that a lot of these people are eyeing each other and not necessarily competitive or spying wise. I think that they're trading a lot of information, because if you're building something in Germany or something in France or something in Boston or something, and it's going to be a different environment to build it in, just legally and everything. So if somebody can help you figure out how to source steel or batteries better, then you're happy to. And also, Fusion is not like, it's not like online payments. This is not Stripe. It's not like a winner takes all market. If one of these companies get it to work, it's not that they're going to get global dominance in 2 years. Like, we can easily have 10 Fusion companies, and we can probably have, like, hopefully many of these, as you also said, Matt, with shots on goal in general. But I think even in Fusion, we can have 3 different technologies that are actually working all, and they have different pros and cons. So I think this is one of those things that we as a species should 100% do, and it's amazing that it's happening. And on a 50-year perspective, we're probably going to be happy to happen. I mean, think about solar PV, how insanely dumb that was, like a while back. Like, it was like a really, really obviously bad idea, and now it's an obviously amazing idea.
And just to build on that as well, like, why is China so strong at solar, batteries, electrolyzers, automotive? One word: competition. It's not subsidies, it's competition. It's such intense, extreme competition between so many players in the Chinese market that the pace of innovation, the pace of deployment is just extraordinary. So, if we just have one fusion company attracting all this capital, ticking along, what's the incentive to rush to market? What's the incentive to, push the bar in terms of what's possible? Competition is fundamental to successful technology development on a reasonable timeline. So I think the more competition, the better.
And on that, I think especially when it comes to this area where it's like both research and engineering, right? Because I think some of the people that are now the chief science officers, some of these things, they were outcasts in other groups because they didn't believe in one engineering approach or one scientific approach. They left and did their own. And if everything was like massive EU projects or massive American government projects, we would have bet on one tech because that was the professor reigning at that big university. And now the PhD leaves and say, I'm starting my own. And then they raise like a $7 million round, and then they're up at trying it, right? And this is amazing. This is really good for innovation.
Do you think that collaboration that you were mentioning, Hampus, will still continue even after someone is able to do Q above 1 and is able to deliver Fusion at a commercial scale?
I think so, because I think that this is not a simple problem. Like, I think it's such a gnarly thing. I'm surprised in like very large industries how much people collaborate in extremely sensitive environments, when you would think that everybody, like on the outside, they look like enemies. But if you actually start going inside, you realize that there are certain things that you don't want to talk about because it's very, like very sensitive. But I think that if you go to anything like the bookings, Airbnb or whatever, if you talk to anybody, like there's some things they might not want to share with each other, but in general, they're very clearly talking about how to handle certain problems.
Well, look, something else on Fusion before we switch topics, but I guess I'd be curious to hear your thoughts, the two of you, in terms of what happens when Fusion goes online commercially. You said we need a mix of different energy sources, but should Fusion be cheaper than wind and solar? With that, reshape the entire energy market, do you think, or is that going to be a drop in the bucket at the beginning and maybe growing towards a bigger part of the market?
It's going to be a very interesting time, is the answer. I think one widely held belief, which I think is important to challenge, is that renewables and nuclear don't work that well together. Renewables generally super low cost, really quick to deploy, very intermittent, and so you need something that you can turn on quickly to fill in the gaps when solar power decreases dramatically or the wind stops or whatever it might be. And for a nuclear plant, whether that's fusion or whether that's fission, you just want to leave it running all the time. You don't want to turn it off. You don't want to turn it on. You don't want to turn it off. You don't want to turn it on. And so that interplay is going to be a really interesting part of Fusion's kind of product market fit journey. And that is also why I suspect all of these technologies, including gas with carbon capture, etc., are going to be part of this, because you're going to have renewables supported by peakers supported by energy storage that can drop in during the intermittency, and you're also going to have increasing baseload from nuclear covering as much as possible of the electrified economy, which, as we all know, the demand from total energy load perspective is going to increase dramatically. So the answers are going to need all of it, but that interplay is going to be really interesting because fusion does not marry well with renewables, nor does fission from a first principles perspective. But curious, Hampus, about your take.
I totally agree with you. I think that we already see the problem, right? Like, I think we already see the tech for curtailment, like when you just turn off solar PVs. Like, I think it's hard to believe, like, I mean, back when I was an engineering student, I remember reading about the fact that you could turn off solar PVs or something. I don't remember why you ever would, right? And it feels crazy to think about today. There are plenty of times during the day when the grid produces too much energy. And that feels like a magical thing, right? Like, it feels extraordinary. So I think there's something really interesting about the fact that, I think that's really the thing that I think excites everybody about fusion, is that what do we do when the cost goes to zero? It's just super exciting. And I think what I like about it is that fusion might be the placeholder, because maybe we're going there without it. So I think at the end of the day, I think that fusion might be 100% of the energy mix in 2200. Up until then, like, we kind of almost have it, like, on a lot of places. So I'm extremely bullish on solar wind combined with battery energy storage. And then I think the biggest problem I think we will end up with is the same problem that fusion is fighting, and that is actually just grid. Like, it's just grid congestion and just like, how do we actually transport electricity and store electricity simply? Because that is such a boring problem. Like, it's a political problem, it's an infrastructure problem, it's a high cost problem. There's very little innovation, and that means that the margins are fairly low. So I think a lot of utility companies, a lot of governments in the world, they would prefer to not upgrade it, right? And I think that's what's also fascinating, I think, about fusion or any kind of localized base load, is thinking, if we change the load of the grid so that we have decentralized production, but also decentralized demand. If it's like households that are burning a lot of electricity and EVs that are charging far out in the grid, then maybe we don't want localized production in the same way. Localized production makes so much sense when you have like a large steel plant, because that takes a lot of energy. But if we look at it today, I mean, the biggest contributors right now are like that are taking a lot of the electricity and are scaling quickly are EVs. Obviously, they're like, massive thing being displaced. We're talking about thousands of terawatts being displaced over the coming to 2030. And then you have heat pumps, which is not almost as large, with like 2,000 maybe or something. And I think those two are like the 50% of the shift. And those things are far out in the grid. So they're in people's houses, which is very different. So like, if you would have a fusion reactor or fission reactor, you would pump all the electrons to them. Yeah. Whereas like, if you can figure out something localized production, or as you said, Matt, before, microgrids, you could actually do much more interesting thing there.
Yeah, well, I guess to close the chapter on fusion, guys, so Hampus, you said maybe 2200 will have a full grid on fusion. One of the news I was reading just before this episode, that Commonwealth Fusion just signed a contract with Eni, one of the largest oil and gas producer, and they said they will buy over every single electron that comes out of a fusion reactor from Commonwealth. So some people might be a bit more bullish than you. Let's switch topics. Something else for today, I guess, which I think is quite interesting, is the rise of what people call the creative capital stack. So a lot more climate tech companies use grants, use debt instruments, use project finance, use a broad mix of financing infrastructure rather than purely equity. So some of the news on that, for example, is SunSave. They raised 113 million with only 13 million equities, the rest being debt. Guys, are climate startups finally moving towards, other type of financing than just VC? And is that a good thing?
I think it's a great thing, but I think for me, it's not necessarily climate companies. I think that a lot of these companies, when they have gone from their scientific part to their engineering part and now going to full-scale commercial, when they go into that full-scale commercial, a lot of these companies end up affecting infrastructure. And I mean infrastructure in a very broad aspect. So like, if you think about the shift to EVs in transportation, even last mile transportation, that is, very rarely financed by equity. Like it is something where it is a bank, it's a leasing agreement, right? So I think that in one way or another. So I think that a lot of these shifts will, as the tech matures, it's going to be financed completely different. So I think that for me, I think the fascinating parts are when you have things like carbon capture and things that we maybe haven't figured out like the clearest business model to. When they're financed differently, it's interesting because then the underwriting of that becomes so different. Like underwriting heat pump installations is not it's not a masterpiece, right? But it's hard to see like, people building, some of the carbon capture parts are going to be interesting how you do like a 20-year agreement on it. I don't know what you feel, Matt, but that's where I would be really curious to see how that actually would work out.
I would gently push back on the phrasing of the question. I'm not sure if climate tech startups, it's a case of climate tech startups finally moving towards debt. I think it's a case of debt finally moving towards climate tech startups to some degree. I think to set the scene a little bit, the most recent climate tech boom really got going in the latter stages of the last decade. And there was a lot of equity capital in the market, and a lot of climate startups raised a lot of equity, and there wasn't so much focus on debt. And I think it's also probably fair to say that a lot of companies raised too much equity, and the capital taps were a little bit loose. Coming out of COVID, the market's constrained dramatically, and in that constrained environment, companies have been much more efficient, much more effective, and in your word, Hugo, much more creative in terms of the capital stack that they want to deploy, particularly bringing in both equity, grants, and debt. But it's also well publicized that debt has not been particularly interested in early stage innovation. And so the number of debt funds who are comfortable deploying into a first of a kind facility, even if that technology has been de-risked to the modular level, say, for example, you do a pilot of one unit and then your commercial scale is, 10 of those stacked together. Even that can be a challenging project to raise capital for, even though the tech has actually been de-risked. But I've been delighted to see over the last 2 or 3 years an increase in the number of funds deploying capital into that space. But it's still a tiny, tiny handful. We need more. So to shout out some names, you have the Breakthrough Energy Catalyst team that have been doing a fantastic job in the space for some time. I think most excitingly, IFM out of Australia, backed by a number of Australian pension funds, is a really exciting outfit who are explicitly looking to finance first of a kind projects with debt. They have a really interesting financing model where they charge pretty reasonable, relatively reasonable given the risk rates, but then there's kind of an exit fee where so that they jack up their returns at the exit, but the company they're deploying debt to doesn't mind so much because that aligns with when they raise the next round. So, the debt provider gets extra return for the extra risk they're taking on, and it aligns with the kind of startup journey. And that kind of creative deployment and creative structuring, I think is hugely exciting. And then you recently have the DSA stuff, which I'm also excited to lean into. So I think it's a case of you've had a lot of minds focused on this problem for the last 2 or 3 years, and I'm excited to see some fruits from that labor, but we really, really need more of that.
Yeah. We're signing an investment today with a company that literally this is what they do. And it's a topic that we've talked plenty about at Pilberdot. Exactly what you're saying, Matt, is like the institutions that do these are very large, very old, very like progressive in how they're thinking, but not necessarily tech companies. And I think that we've been discussing about this forever because we are in a couple of key people, like, companies that have, like we have the Pebbles and the Hives and the Embers and others that have like, they need to finance some kind of structure that like, and somebody of these are lighter and some are harder. And I think what's fascinating is that some of these problems aren't that hard. So like it's more how to structure them. So I hope that we can be public with it in a couple of days. And I think there are going to be plenty of companies that are, like if you build a company, very rarely do you have a CFO who is actually savvy enough to do real structured asset-based financing and set this up. And that's something that the CFO salary is maybe, a big cut part of your runway to have that kind of CFO. And especially if you're a fairly scientific team and you're building something which is hard science, then that's not even on your payroll. Like your CFO is a person who pays the salaries right now and pays the lab, and that's about it. So I think that's one of the big bottlenecks here, is that just like the big gap in competence on structuring finance.
And Hampus, is that something you would want to see then? Is that would you want to see more funding member that are CFOs?
No, I wouldn't say so. I mean, I love CFOs, but I mean, they're not the most risk-taking and daredevils I know. So I think it's one of those things where I think it's a balance of, and we talk about that a lot, is like when we meet deep tech teams, we usually feel like deep tech teams need to be, of course, they need to be very impressive scientifically, but I think they also need to be very, very impressive at fundraising. Because the journey is not going to be, it's not going to be like you meet an investor in 9 to 12 months and you explain the scientific breakthrough and they're just going to give you more money. Because if that's your pitch, you have 10, 15 VCs around the planet who are competent enough to actually sit down with you and understand it. So you have to be able to explain it in a more fascinating and interesting way. And if you can, then you can raise from 200 VCs on the planet. And if you can explain more commercial and everything and how it does everything, then you have thousands of VCs to talk to. So when we talk to deep tech teams, one of the things we have a lot of conversation with them about is just, do you understand how complex fundraising is? And I think that if you meet a random marketplace SaaS company, then the question is, can you execute and build traction very quickly? Is like, one of the biggest headaches, and how do you handle competition? So I think that for me, it's more actually indexing more on fundraising in those areas. Which means that, I mean, the CFO, if you can rank, what you're needing to hire, the CFO is something that you might put off a bit later. So I think that's like and I think but it's not rocket science. Like, it's a service you can hire. I wish there were more like, I'm blanking on his name now, but there are a couple of companies that do these fractional CFOs for climate startups that are actually helping out with this competence. Because it is one of those things, if you actually start building multiple battery parks or anything, then back to like what Matt said, don't put on equity, for God's sake. Like, I mean, this is something you can structure and actually make non-dilutive.
But I think for those kinds of classic infrastructure plays, like a battery park or new vans for deliveries or established technologies, I think we're in a situation, I think, where it's important to be clear, right? There are a lot of different entities that can fund that stuff. And they can fund machines and stuff, production, all of that stuff. It is specifically around these, what everyone calls first of a kind facilities, which I also think is increasingly becoming a unhelpful term, because everyone has a different interpretation of what it is. And someone's demo facility might be relevant for project financing. Someone's demo facility might be basically a pilot, for example, and therefore totally inappropriate for project financing. So I do think we kind of need the next level of detail when we have this conversation, and not just go FOAK this, FOAK that, FOAK's really hard, to almost help the debt space in understanding which projects are relevant for them and which projects are not. Because I think the debt space has a default reaction to FOAK is not backable with debt, and that is certainly true for some technologies, but other technologies, particularly more modular technologies, the technical risk can be mitigated before you get to that scale. So before you get to FOAK scale, and therefore it is backable with that. And I would call for both more players in the ecosystem, but also maybe moving away from these broad labels, or at least clarifying what we mean by these broad labels.
Yeah, the name itself is not particularly well chosen, I guess, because like going to a debt fund and saying, hey, this is the first of a kind, like we've never done this before, do you want to back it up? Like, that doesn't work super well for sure.
Maybe to bring it to life a little bit, I actually had a conversation at the drop last week about this. I won't name names, but you can compare two companies. One produces one unit, a little bit as I touched on earlier, and then you stack 5 of those together to give a kind of a larger module. And you prove initially the unit, and then you prove the module, and then you put 10 of those modules together, and you have a commercial facility. From a de-risking perspective, that's much more straightforward. From a debt perspective, I had a conversation last week where it's more of a reactor design. So actually, you have a reactor that is 10 meters squared, and then you have a reactor that's 30 meters squared, cubed, and then you have a reactor that's 3 times the size of that. That is much harder, because each time there's totally novel elements to that. And I think that kind of, both are running around talking about FOAK, but both have completely different risk profiles from a debt perspective. And that's where I think the conversation gets a bit confused.
And if we take the second example with the reactors, do you think that's where VC should come in as a signal to say this is actually safer than what people think, to reassure, I guess like other players to finance the company as well?
You have great faith in how much the world trusts venture capitalists talking about their own investments. But I don't think that's our role, but I do think facilitating the conversation between the debt provider and the founders from an early stage, so they can have that conversation over a long period of time, build up that trust, make sure the debt provider feels like they understand the technology, they understand the tech de-risking pathway. I think that's the role that VCs can make in terms of making those connections. But then, I really don't think a debt provider is going to set much store by what we say about our own investments.
I'm being super impressed by some of our founders. I think that Marta Pebble has talked about, ever since we did the first round, they talk about the road to bankability. And I think what I've been very impressed about is how many times they've talked to, later stage CFOs of very complex infrastructure companies, but then also to different kind of lenders or institutes to actually just figure out the long roadmap. And I think it's kind of like, if you think, again, it's if you think about fusion, back to where you said before, Q above 1, that same equation consists in a debt institute where they don't care about Q, but they care about another thing that they want to know is above 1. And I think that one has to have that roadmap from 0.2 to 0.5 to 1 to 1.5. And I think as an early stage founder, I think it's one of the many roadmaps you have to take. It's the same thing if you're running a marketplace. You have to figure out your margins and returning customers. It's a roadmap. In the beginning, you will lose money, and then you just look at how that goes above 1, and it becomes like a positive arrow loop. I think it's something you should earlier start to plot and figure out what are the milestones towards bankability. And there's one time in which a bank will just say, this is amazing, we're happy to finance your XYZ, your larger reactor. But I think right now, as you said, it's we have to figure out other ways to finance when we just, change and there's still science risk.
It's interesting because we keep mentioning the word bank or the institutions, right? But I was reading a few cases from last week where actually big corporates come in as well and say, hey, we will offtake such part, or we will, they come in with a signal as well to work with the bank and create the deal. But look, one last section for today, because we are running out of time. It's just great talking to you guys. We could do that for hours. But in the news, OpenAI has just signed quite a massive contract with Oracle, a $300 billion cloud computing contract. And, while I think the tech is quite interesting from a technology perspective and what it means for the cloud market, something else which for us is a bit more relevant is that this contract will need 4.5 gigawatt of power capacity to be fulfilled. I guess just want to hear your take. Is data center growing faster than we think? Is it going to be a bigger part of the energy grid or energy consumption that we think already? That seems like a massive number to me.
For me, it is the new shiny part. I think we're going to probably see maybe, let's say, 5% of the energy demands in 2030 are going to be AI. And I'm making up a number here, it is a back of a napkin thing. I think what's crazy about AI are two aspects, apart from the fact that you can make really funny pictures and have it to write thesis work for you. I think the other part of it is the fact that it's one of the few things that are growing double digit, right, in energy demand. Most of the other things like this, the steel and the other ones are shrinking or flat. And I think that then you have compute and which is just then growing very, very rapidly, which of course puts it on the radar, right? It is very irrelevant in that sense. At the same time, one just have to realize that how big it is in comparisons to EVs and heat pumps and, industry or even agriculture. It's very small. I think the other thing that makes people really care about and what politicians really care about, which I really understand, is locally, it's super true. If you take Ireland or Northern Virginia, and I think that also Netherlands, I think it is, that where hyperscalers are 20% of the energy demand. And then, of course, by God, then it really matters. So I think it's one of those things where the future is here. It's just unevenly distributed. And I think if you're Irish, then it really matters. So I think that, I don't know how much Oracle, I don't think they're going to build their data center in Ireland, because of course what happens here is hopefully the market figures this out in the sense that you don't want more data centers in Ireland because it's going to be too expensive, because there are too many data centers. So I don't think it's going to be a big problem. My hope is that the demand AI generates, and because it has such a limelight, and it because it has a very geopolitical aspect with US versus China and Europe in a sense maybe, that means that they're going to be a lot more interested in starting up nuclear reactors, or building out more solar, or like gas, as you said, Matt, to just actually be able to handle AI. But we're probably not going to be handling. It's going to be 1 in 100 electrons that go to the data center, and 99 will go to the EVs and the heat pumps and the other ones. But I'm very happy for that, for the newsworthiness of it.
Yeah, I honestly I agree to a very large extent with Hampus. I think it's really important to put the conversation in context. I think the number is, that I read at least, is that data center capacity as a proportion of total load in the US is projected to go up to about 10% of total load in the US by 2030. But it's also really important to know that 70% of the world's data centers are in the US. It's actually quite a US specific issue, and specifically quite East Coast of the US specific issue. And I think we've been writing about the data center energy demand growth problem for years. We put a thesis out, I think, in 2022 after we invested in a company with a very energy efficient chip that data centers is called Intensivate. And, we've seen this coming from a very, very long way away. I think the frenzy in the conversation today is blowing it a little bit out of context to support some of the points that Hampus was making. I think heat pumps outsold fossil gas boilers in the US last year. Home heating is a much larger energy load than data centers. As that transition goes, some of these consumer devices, EVs, heat pumps, could be much larger. But long story short, the result is still the same. The global economy is electrifying at an extraordinary rate. We wish it was faster, but it is electrifying at an extraordinary rate. We need all the power we can get, interconnection, clean baseload power, etc. All of those problems are real, and data centers specifically have brought a lot of attention onto that problem. But particularly from a global perspective, I think it's important to put into context. It is, as Hampus said, a hyper-localized issue in many cases.
Yeah, and I think the positive point on that is that the Microsoft, the Google, the Amazon of the world, they sit on a lot of cash, and they will need to create the infrastructure to power this data center, and they will likely go for an option that's the cheapest one, or at least the most efficient one. And in lots of scenarios, that's going to be the climate companies, I guess, right?
100%. I think it's a positive note. Those companies are the sponsors, a little bit to the point you touched on before. In terms of unlocking debt financing, offtake is critically important. That offtake has to come from a blue chip, credit-worthy customer. The hyperscalers are exactly that. And whether you are Vervo in geothermal, whether you are Arbor in BECCS, whether you are Commonwealth Fusion in Fusion, the people putting down these offtake contracts are those companies, and they're doing it because of data centers. So from a climate perspective, it's fantastic at commercializing new technologies as quickly as possible. So we welcome that attention, welcome that participation, and it's going to be exciting to see what can move quickest.
I think also on that note, I think AI for me is like Bitcoin was in 2015 maybe. I think that I found it very fascinating in 2015 that the people later, 2017 of course. I think it was fascinating to talk to people about Bitcoin in 2017 when you had the ultra left and the ultra right both agreeing that we need Bitcoin, but for very different reasons. And I think that you found that in any bar in Berlin or SF or whatever, people were really I disagree with the person, but I agree we want Bitcoin. And I think that I think AI is similar now, that I think that you have people who really want free and cheap energy, both the people who really believe in climate change and really wants to make sure we don't pollute, but also on the other side, people who are heavily scared about China winning the global development war and destroying every other nation with their ways of working or politics or armies or whatever reason, right? Which means that people are putting a lot of AI data centers and the compute locally instead of putting it elsewhere, which means that, they need more cheap electricity. So I think that I think AI has been so politicized, which means that energy becomes very politicized, which is great. Let's build a lot of energy, free and clean. That's really good. So I'll take it any day. I mean, we can blame another country, or we can blame pollution. I don't care which ghost you're chasing.
Well, guys, it has been a pleasure. Matthew, I know you have to run to New York Climate Week, so enjoy that. I really love this new format. I think we got a lot covered. I hope you had a great time as well. But thank you so much for coming on the show today.
Enjoy New York Climate Week, Matt.
Thanks, Hampus, and thank you very much, Hugo, for facilitating. Great to see you both, as always.